Divorce is already stressful, but if you own a home together, your mortgage could turn into a financial disaster if you're not careful. I've seen people assume their divorce agreement protects them, only to find out months later that their ex stopped making mortgage payments and wrecked their credit. Or worse, they thought refinancing would be easy, but then the bank said denied, and they were stuck in a financial mess that they never saw coming. Trust me, you don't want to be in that situation. In this video, we'll cover what happens to your mortgage during a divorce, how to protect yourself financially no matter what your ex does, and the biggest mortgage mistakes people make and how to avoid them. I want to help you get ahead of it before it turns into a problem. First, let's clear up a major misconception. Your mortgage doesn't change just because you got divorced. If your name is still on the loan, you are still legally responsible for payments no matter what your divorce decree says. If your ex is supposed to pay and they stop, the bank doesn't care. They're going to come after you too. Here's what you need to know. If you plan to keep the home, you must refinance the mortgage into your name only. Your divorce decree alone doesn't remove your ex. If you don't qualify for refinancing, you may be forced to sell or stay financially tied to your ex. If your ex is keeping the home, make sure they refinance and remove your name as soon as possible. Until your name is off the mortgage, you are still financially responsible. If you plan to sell the home, the mortgage will be paid off at closing and you'll split the proceeds based on your divorce agreement. Many people assume refinancing will be easy, but not everyone qualifies. If your ex is supposed to refinance but delays or refuses, you could be stuck in mortgage limbo. I've seen far too many people walk into these traps, thinking the divorce decree automatically removes you from the loan. A judge can order your ex to take over the house, but unless they refinance, your name stays on the mortgage. That means if they miss a payment, your credit takes a hit too. Next, waiting too long to refinance or sell. Some people wait thinking, I'll figure it out later. Then the market shifts, rates go up, and suddenly they can't afford to refinance or sell. If you're keeping or selling, start the process now. Next, trusting your ex to make payments without proof. If your ex is paying the mortgage, don't just assume it's happening. Set up online access to the mortgage account so you can verify payments are being made on time. And then finally, not working with a real estate or mortgage professional early. You need to know if refinancing is even possible before you commit to keeping the home. If selling, you need a clear timeline and plan to maximize your home's value. If you don't have a clear mortgage plan, now here's the time to get one. Here's what you do. If you're keeping the home, get pre-qualified for refinancing now to make sure you can afford it. Work with a lender to remove your ex from the loan as soon as possible. If your ex is keeping the home, put a deadline in your divorce agreement for them to refinance. Until your name is off the mortgage, monitor payments carefully. If you're selling the home, get a market analysis to see how much equity you walk away with. Work with an agent who understands divorce sales to make the process smoother. This is not something you want to put off. Every day you wait is another day you're financially tied to your ex. Divorce and mortgages are a dangerous combination if you don't have a plan. But if you take the right steps now, you can protect yourself, your credit, and your financial future. I help divorcing homeowners in Raleigh, Cary, and surrounding areas navigate these decisions with confidence. If you don't have a mortgage plan yet, let's talk. The sooner we get a strategy in place, the more options you'll have. Call and message me today so that we can schedule a consultation.